Ladies and gentlemen of the crypto space, we're having a Friday, August 30th at 11:31 a.m. One, that intro music gets me amped up. Two, this chart is depressing AF. All right, so the destination remains unchanged. The path looks like crap. You got oil availability concerns globally. This will put pressure on the dollar and dollar strength amidst the backdrop of where we are of a tightening yield spread between the US and Japan puts even more pressure on deflationary forces being exported from the east and imported into the west, and all of that shit has a way of bleeding over from market to market through market actors, us people, our sentiment, and that creates bearishness and broadly depressive forces. They call it depression for a very simple reason. It's fucking depressing. Not even just in terms of depressing of prices, but from an emotional standpoint as well. So we're drawing on our last ounces of effort to peer through the bullshit, to remain rational. As I started, destination is completely unchanged, and the structure of the system at large tells us our destination is going to be comforting in a very unfortunate kind of way because of the significant asset price inflation of the crypto markets and deflation in many other markets, including maybe the domestic U.S. real economy. That's kind of unfortunate. Clearly, that's an expression of disparity where one group that has exposure to significantly inflating prices in investments is outperforming and doing very well, and the rest of the population is experiencing a depressive environment. So maybe that is something that's important for all of us to understand when the crypto market rallies and does the shit that it has historically done when systemic liquidity significantly increases in the financial economy. It's amidst the backdrop of a very depressive environment. So, in the good that we see is really a larger reality of bad that's occurring for so many more people because you always have to remember it's an ultra minority of persons that even think about engaging with crypto markets or these types of investments that anyhow. I often think about like the Great Depression and crashes in the 80s and crashes in 2000 and crashes in 2008. There is always a party that is significantly outperforming, someone that is doing extremely well while the vast majority are getting hammered. And that is an awkward reality to think of in terms of economics. The few are on the right side of such dramatic trades. Always remember that such events are really an expression of volatility. A crash isn't a crash. That's just a gen pop terminology that is expressive of something that has extensive character and granularity to it. A crash is a rotation of capital from one market to another in a very unorderly fashion. A significant rotation of capital is what folks define as a crash, but it's really just a reorienting of priorities that has warranted a significant redistribution of capital from somewhere to somewhere. And that creates a whole lot of sentiment that spreads like wildfire throughout a market. So DXY bounced nicely in the not so good kind of way off basically the 100 region. Now, this is on the weekly chart. Where's resistance? Clearly, that is not going to be pretty. You get to the daily 200 and systems, how strained they are right now, and the situation with regard to energy around the world, the prevailing conditions, that's going to mess things up. And that is going to cause a significant rotation of capital. And you could easily see dramatic volatility in U.S. equity markets. If oil rips to 80, 80 plus, 85, 90, oh my goodness. People get scared and fear spreads and fear causes consolidation, liquidation for currency units, so on and so forth. Reevaluation of investment theses. Maybe what I've been saying with regard to the bubble stocks that are significantly overvalued because not necessarily 401k passive flows, but because of just retail piling the shit that's going up that makes shit go up, which causes more people to pile into the shit that's going up. That's called the bubble. The bubble stocks. And then you have a rotation out of the shit that is hyper appreciated into something that's more meaningful, like domestic US industrials, mining, manufacturing. That's extremely important. Very important to invest in things that are important for society. Meanwhile, they've been completely neglected. Significant capital under allocation to these particular sectors. Gross mismanagement of capital from an investment standpoint. What is it? They call it malinvestment. And that is the trend. That is the theme of post 2010s. And that's an unfortunate reality. This is where we are as a society. There's just really an expression of under potential or under availability of opportunity. And people have become degenerate at large. They have no critical capacity for the investment process. And it's really just pile into the shit that's going up. And that is not how you invest. That does not contribute to, future. It's not an investment based on future expectation of returns. Like VCs invest in a startup because the startup is building a product, and the product in 5 to 10 years' time is speculated to be generating revenue or to have generated something that is sellable as a business entity. And then there's a return on capital. But that's not why people buy stocks. It's not why people buy meme coins. That's not the thesis. That's it's sad as a society. Let's go a little bit shorter time frame on the 4 hour. So we got an MA resistance on the 4 hour. Look at me, the captain, king of high time frame, and we're looking at a 4 hour chart of the dollar. Yeah, shoot me now. But this is where we're at to find the most uh, shortest time frame that has a moving average resistance in play. Now, we just had an expression of a level of support. I mean, technically, maybe there's a level of resistance. It does look like there's potentially a level of resistance right around there. Let's draw a line, horizontal line, somewhere around here. And we'll draw it at the bottom there because you got support expression in this region, you got breakdown and then flip support. Yeah, this looks like a decent line, decent level for consideration. Support, breaking of holding of support, a breakdown of support, and then just pushing right through it. Okay, so that's a decent line. So maybe you get some sort of blow off through the MA into a support flip resistance, depending on which side you're looking at it. And that would be your reversal zone 102. Oh goodness, that's going to cause some pain. Strong dollar is probably the most destructive force in the planet. It causes currencies, entire financial systems to capitulate. Quite insane. But that's what it does. And the dollar is only destined to get stronger considering the structure of the system and what the world has done. It's what they did. It's what people around the world have chosen to do that will make the dollar attain its final form cyclically. And its final form is dollar up, which is awkward and very contrarian to so many. But mechanically, it's just the way it works. You pay off debts. There you go. There's fewer dollars. Now the dollar's more valuable because they're literally actively destroying the country when they pay off dollar debt. Like they're going to pay off dollar debt. All productivity around the world is in the shitter. GDPs have been contracting significantly, then not only are they not going to pay off the debt, they're going to take on more debt and refinance their old debt. And that's the way these cycles work, at least for the foreseeable future. When I say the foreseeable future, I mean probably cyclical multi-year intervals for 8, 12 years. Coincidentally, centering around the interest rate cycles, um, amongst other things, not just the interest rate cycles. There's really debt maturity cycles, which is on average like 4.5 years, give or take. Um, that's the most constructive statements that could be said about the DXY. Collateral market volatility is still pronounced as compared to historical terms. Maybe it was an aberration that we were able to suppress volatility so low for so many years between 2010 and 2020. A strong period of volatility suppression. Maybe the average over the next 10 years is, 90 to 150. And that's certainly not what the regulatory authorities want, Treasury. But that is what they may get, depending on their capacity to actually implement policies and facilities that contribute to a decrease in volatility in these markets. Um, Volatility is very elevated, albeit notable from a technical standpoint. It is lower high, lower high, lower high, lower high, and we have lower lows. This is a weekly chart, so we're talking about May 24 was our most recent low, and inverse head and shoulders to a degree down at the bottom here. Clearly a directionality reversal with a higher low in July. And there is a low here back in August, which is this month. So from a technical standpoint, maybe the moving average indicates on a volatility chart that something is working because we are below the 100 on the weekly. Maybe they do have, you know, mechanisms in place. The DTCC central clearing, they slow shit down, they find counterparties and all that stuff that facilitates a much more smooth market function, relative increased liquidity depth of the market, and by means of policy and procedure. And that might be the case, in which case we'll see that manifest in the chart. If they gain control over the market and they're able to suppress volatility, that will stabilize the system. You're able to stabilize this market, which is the United States debt market. You're going to stabilize the dollar because why buy dollars when you could print dollars using collateral, which the world obviously has expressed an interest in doing. They clearly find a favorable interest rate, they get good terms, and instead of buying dollars at FX market spreads, you buy collateral and you try and negotiate terms with a creditor, hopefully at a cheaper price than what you could buy, considering the fees and spreads on FX markets. And that's basically what I define as a euro dollar dollar arbitrage type of financial consideration. But in any case, we're not there yet. In any case, the dollar is expressing stubbornness, extreme stubbornness. Now, bear in mind, we're in September. History says September is not a fun month to be in markets. A lot of fear in the markets, depressing, so on and so forth. Got rate cuts that are probably coming, considering everything that everyone's talking about. And rate cuts are surely going to contract the spread between the US dollar or US debt and Japanese debt. And that will put deleveraging pressure on credit in Japan used to invest in US debt, and that ultimately is depressive of the dollar, but is also an incentive to liquidate U.S. investments, and that implies either commercial residential real estate and or securities, equities. So you'll have a deleveraging, and that's a lot of capital that has been leveraged from credit over in Japan to finance these U.S. side investments. Um, So that's something to consider from a path perspective. We could have significant deleveraging. We saw that with the 25 basis point hike in Japan, and then we'll have a 50 basis point cut in the US. You could easily see significant drawdown in US equities, and that's clearly dependent on the exposure that Japanese firms have to US equities based on their investment choices. And that's a reality with regard to the path. Now, clearly, there's a variety of considerations. Fed says they're not considerate of the U.S. markets. But until Yellen and the executive branch call up and say, dude, our tax receipts are down 40%, or we're projecting them down to be a significant double digit percent, um, you need to do something. Otherwise, our deficits are going to blow up to $3 trillion in 2025. And then it's just the debt spiral conversation. They don't boost GDP. They don't ramp GDP. Deficits keep going up. And that's the unsustainable path. They need to use deficits to facilitate an increase in GDP such that tax receipts go up. Why do you think Kamal's talking about these tax hikes? They got to balance the budget, and they're obviously drawing at straws how to frickin' do it because they can't cut spending for shit. And their budget balancing attempts are clearly counter to what the vast majority of the population would like to see. I mean, frankly, the vast majority of the population doesn't want to see spending cuts, even though that's what people scream about. You don't see Social Security 80-year-old recipients saying, you can't sustain this. You got to cut my benefits 50%. Of course, they're not saying it. Such a remarkable disconnect between the general public and public office, the policy of our executive branch and our Congress. Um, yeah, I wonder what it was historically. Was the general public more astute or less astute historically with regard to understanding actually what the fuck is going on in their own country with regard to policy, with regard to economics? I guess maybe it was always the case that the general public was so departed or indifferent implies intentional departation. Depart. They they're just not in tune with the reality of the world in which they live, and that's the blue pill, red pill type conversation. Not even talking about conspiracy theories. We're just talking about understanding economics and how the system that they live in works. The video game, the RPG, MMP, MMPORG or MMPRPG. You know what I'm trying to say. You got to know the rules to the game to be able to optimize and excel in the game in which you play. And yet everyone literally goes on and knows nothing about the rules. I contemplate that a lot considering the rules that I read and understand. You guys know all about that stuff. This stuff is, by the way, my document is up to 65 pages. That's insane. All right. So I talked about dollar, a little bit of move, Bitcoin chart. I'll give you the max contrarian view. Had one comment on X that was probably guide the rest of the stream, aside from comments. But Bitcoin, this is a non-logarithmic chart, and we're about to have a bullish 100 SMA, 200 SMA cross on the weekly if Bitcoin remains above 39,000, give or take. Now, what does that mean? Because people are like, we're up at 61, and this guy is talking about 39K. Yeah, the fucking price is at a premium. That shit is significantly departed from an average price. That is by definition. If you're departed from the average price, you're operating at a premium. If you go out to the monthly and you are insanely departed from the average price. In fact, from a Bitcoin non-logarithmic standpoint, we've never had a mean regression to the 100 as an average price, even at the lows in March of 2020, nor in the lows of 22. You never hit that price. Go out to a 6 month. No, 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 no. Let's go back to the weekly. You'll see back in the lows in 2020, you did breach the 200 to the downside and you rode right along it in April of 2019. So this was a pretty depressive couple of months in April of 2019. But you are in the longest and deepest drawdown in Bitcoin history from 2022 to present, and never before has Bitcoin been this elevated in price after such a staggering drawdown. It's such a staggering drawdown that we're able to visually inspect a 100 weekly cross of the 200, which has never occurred in the history of the Bitcoin price on the weekly chart. And we're about to experience a re-bullishing of the cross. Dip down, back up, and we get to see what plays out. I define Bitcoin as remaining bullish as long as it stays above 39,000. Now, what's this guy talking about? What's the captain talking about? All right, if you bought at 60 grand, you bought at a premium. If you bought at 15 grand in November of 22, all right, you bought at a discount. So if it drops to 39K, you're like, all right, still bullish, still structurally bullish from a moving average standpoint. Food for thought. Introduces a lot of hindsight and second guessing of why we how and when we do what we do, which is purchasing, which is quote quote investing, so to speak. Anywho, Ethereum mirrors this to a degree, but Ethereum is significantly more weaker. Um, Nasdaq S&P just basically going horizontal. Looks like everyone's 401ks are passive flowing directly into Nvidia. You got a direct enema injection of people's 401ks right into the Nvidia ass. All right, that was very graphic. I shouldn't have done that. But that's basically what people do. They're like, I have my job. I check the box of the 401k, and the 401k is like, yep, here you go, Nvidia. That's basically what it is. That's what these indices are. It's the most concentrated in history. So that means all the capital is concentrating into these few instruments. So when the rotation happens and all of a sudden there's a good reason to invest in industrials, where's the capital come from? It comes from the overpriced pig shit. Don't get me wrong, Nvidia is changing everything with their computational technology, and AI is certainly going to change everything. It doesn't mean there's not other good investments. There's certainly not other necessary investments for society to function. You need mining of critical minerals and materials. You need manufacturing, goods, you need services to facilitate the management, retail, installation, maintenance of manufactured goods. Contributes to an actual functional economy. So there's been significant malinvestment in those areas over the last decades, unfortunately. You see that, well, you look to the Dow Jones, but I don't have that up. Um, Russell is weak, never pushed back above highs and set in 2021. It's been down since there. So this is, you probably want the Wilshire 5000 to get a best expression, or RSP at least, equal weighted. And the stock market looks like shit. So anyone that looks to S&P 500 or Nasdaq as the stock market is not looking at the stock market. They're looking at two ETFs that have nothing to do with real economic conditions. They're literally looking at the bubble of the country, which is what I define. If you're driving through and you go from a bad, an impoverished neighborhood to holy shit, that's a crazy neighborhood. And then on the other side is another impoverished neighborhood. Clearly, the good neighborhood is a bubble in the middle of two realities. Well, that's what these are. These are the bubbles. S&P, Nasdaq, nothing to do with the economy. Just a concentration of capital into the fewest names possible to give and people take it as a perception or an expression that this is the economy. They actually mean nothing. Just a couple of companies. You're talking about 100 companies, and then 500 for the S&P for a country. filled with 300 and just about 75, 80, 90 million people at this point. Very important to have a little context of what you're looking at to understand the significance of it. Um, Gold hovering about 2,500. Interesting. Financial conditions are loosening, 2.27%. That's interesting. Logarithmic. Okay. Okay. Let's look at Fed balance sheet. I hate this. I'm not drawing those anymore. Don't draw technicals on this kind of chart. But a little bit of a dip on whether it's on trend or not. But there's people that think that the Fed doesn't do what they historically did, and maybe Treasury acts as the facilitator of collateral market liquidity, volatility suppression. They have their buybacks, so that's QE. If anything, their buybacks are maybe a little bit more strategic or reserved as compared to what the Fed historically did. But basically, they're actively buying uh, relatively illiquid components of the U.S. debt, the yield curve, to increase overall liquidity. And that should, in theory, over time, cause the move indicator to roll over, and then the world goes off and turns on the money printer. Others is interesting. Bitcoin dominance. I mean, at some point it breaks because it always does, and that is a matter of time because this is a rising wedge. And a rising wedge means its expanse or its breadth, BREADTH, to the upside is exhausting, and it's going to roll over. And this is exactly what I'm talking about with regard to overpriced pig shit equities, Nasdaq, S&P, rolling over into industrials. So I'm not calling Bitcoin overpriced pig shit, but I'm saying that its relative valuation compared to other things that have significantly smaller market caps and are in desperate need of capital infusion warrant capital rotation, reallocation of capital from something that has outperformed significantly, which is Bitcoin, has relatively outperformed significantly as depicted in this chart, rolls over into the rest of the market where investment opportunity is seen. As breadth rolls over and it does not continue to move up as much as it did, capital rotates from that relative underperformance to something that's outperforming because something that is smaller like a $50 million market cap asset gets a $20 million infusion, its percentage gain is significant. So that is a perceived significant outperformance. You get a 100% return on a relatively small market cap investment coming from a 0.01% rotation of capital from a Bitcoin or an Ethereum or a capital infusion from exogenous markets and their exogenous capital inflows. And that's what people call the altcoin cycle. And all these cycles are the destination. This is going to cycle. Cycles will cycle. This is something that's natural and a component of the real world in which we exist. Capital will rotate from Bitcoin. Capital will rotate from pig shit equities into industrials, especially as supply chain repatriation efforts, deglobalization efforts, so on and so forth. And altcoins, which are basically startup companies, fintech startup companies, will get capital infusions, just as we saw in 20 and 21. And the meme coins will do what they always do because it's stupid, and they will because it's an expression of desperation, and that's okay. But these rotations and the cyclicality are inevitable. It's the timing of them that never get. Fortunately, the timing's irrelevant. If the destination is clear, all we're doing is having a conversation of the path. Path and destination, ladies and gentlemen. Okay, let's go through some commentary and see if I get back to what Rectimides is on his mind. He wanted to talk about AI, future economy in general. Well, I covered the economy, AI in the future. There's no post 2030 perspective that we have. Everything changes. I mean, it's really all changing literally today. The improvements to Claude and its capacity to do programming are insane. You could literally build back end and front end web with React, or literally it. I saw Claude literally develop like React Native and build an APK and install right on the phone in a single prompt. And I was like, what? So quite fascinating what can be done nowadays. Um, I'm flabbergasted and a loss for words. I mean, the conversations that I have with ChatGPT are insane, and they're all going to be pros and cons about all of them. Probably even get some private models. You build your own models that do some incredible things. But the conversations that I have, so I've trained it. So nowadays, when it first came out, there wasn't much of a memory, meaning there was no seamlessness between conversations, but now you have these centralized memory implementations where you could literally update memory. It's like display um, memory rules. No, actually, display memory rules. There's a whole memory, um, and that means your conversations build, and that means all right, but they're there because you could literally type update memory, and if you go into settings, personalization, and your memory's on, and you can manage your memory, and you could literally define a lot of rules. So, and that becomes quite insane because that means all of those rules are processed during every communication. That means you're literally teaching it. And at some point, you'll be able to tell it to define its own rules. Like you create a rule that you are to add an additional rule every time something informative is constructive against the entire rule set. I mean, it does it sometimes, but maybe if I did that explicitly, it would improve the rules even more aggressively. So, very interesting thing that I did was I created a scoring algorithm using standardizations and legal um, baselines, um, and I use it to grade arguments and my document and text that I write, and it's so incredibly iterative. It's not perfect, meaning what it generates. Often, what I do is I read it and I adopt it, and then I make modifications of my own to it, and then I highlight to it why I made specific modifications. And the point is there to update rules that it's using, and then I say, incorporate these modifications that I've made, enhance it further according to the scoring evaluation that we've determined. And basically, this is a baseline. So if your scoring evaluation is 97, and you're like, all right, show me something that is more consistent with 99. And then you see, and then its output, you're able to evaluate and read, and you're like, all right, that's fascinating. That is an excellent argument. So you're literally having a conversation with a computer that is allowing you to be significantly more constructive than you could potentially be on your own because this is interaction. With yourself, it's not interaction, it's just revision. But this is a third party between yourself and your mind and something else. So this is utilizing systems like this. You could do insane things. I'm quite fascinated by everything that I've been experiencing with AI, and I'm just at a loss for words for what I currently can do in consideration of where things are heading, and I know what we will be able to do in the near future. A little scary post 2030, that entire conversation. Let me know. I think this is a nice couple minutes I talked about this, but if you want me to keep talking about what's coming for AI, I'm more than happy to. Just throw it in the comments. If you're on X or YouTube, feel welcome to post any comments. Happy to talk about anything on your mind. Dan in the house. DA advisor, good morning. Arrow, Gazika, Sergio, Tapsy, Capita Friday, cheers from Bangkok. Yam is in the house. Much a pleasure. Frank, howdy. Wanted to do a little shout out. Your concept of wake up money is great. Please don't stop hammering that. That's such an important component for a healthy life, both mentally and financially. Now, the hardest thing people have to do is the exact same thing government has to do. So, how do you cut spending? How do you cut spending? Income needs to be less than spending. Okay, is which what does that mean? It's so easy for people to get up their above beyond their skis. They're able to bite off more they can chew, and that's clearly going to manifest itself in the struggle. Oh, I can't make ends meet. Okay, so clearly that's pervasive in society. People don't live within their means, and you could argue that it's people's fault. You could argue that it's the employers are not paying their fair share. You could argue that money is broken, uh, but in the end, it means you can't afford to do the things you're doing, and you need to spend less money. And then quantitatively, how do you do that? That means instead of living with two people, you have to live with three, because that just means you reduced your um, living expense by 33% instead of 66% instead of by 50%. And that obviously has its conditions, and that's very emotionally frustrating because, frankly, a lot of folks want to live alone. But you got to remember, a lot of cultures around the world live generationally deep. It is very common for many cultures to live with their parents, their brothers and sisters, their aunts and uncles, and their grandparents. And you got three generations and 15 people in a house. And if you got 15 people in a house making 50 grand a year, you could afford $1 million house. You're making 50 grand a year. So what you're doing is you're socializing your efforts amongst your immediate family. Now, where do I see this? Very common in culture. Queens, Indian culture. Oh, they live deep, and that's cool. Why? That's how you spend less than you make, and also you're socializing your efforts. Now, whether you do this with family or not, and you do this with friends and colleagues, it's not really much of a difference. But that is an incredible way to collectively achieve what oneself individually cannot. Let's say you make it 50 grand a year, you're not going to afford a 50 million, a $1 million home. But if you live in 15 deep with brothers, sisters, aunts, uncles, grandma, and grandpa, okay, you could afford that 5, 6 bedroom home with sitting on 2 acres in Texas with a pool in the backyard. Okay, all right, $1 million home in Texas, you're getting an 8 bedroom. That's probably what you need. If you're running 15 deep, an 8 bedroom, everyone's a couple. All right, that makes sense. So half the problem really is the critical capacity to sit down and produce solutions, contemplate them first, and actually effectualize, engage the solution. It's hard to make changes. Anyway, that's a bit of a digression, but wake up money is everything because wake up money is the amount of money you need to wake up in the morning. And if you're making 4 grand a month and your wake up money's 2,500 bucks a month, man, that sucks. That's not fun nor good. Um, Empathize, but I can only remind folks it is imperative to get your shit under control. And when I say your shit, I mean your emotions. And when I say get your shit under control, it means you got to sit down and crunch some numbers and make some hard decisions. Because Charlie Munger said you got to get that 100 grand. And that 100 grand isn't by gambling. It doesn't need to be by gambling. It could be made methodically and mechanically by employment. If you're making 50 grand a year, you could save up 100 grand in 2 years if you spend no money. So the question is, how do you spend no money? Hey, mom and dad, I'm 20 years old. I'm going to stay here for 2 years. I've been living here since I was zero. Uh, can you stock the fridge and, cut me some slack on rent just for 2 years? Yeah, honey, we understand then you'll have 100 grand and you could probably do something interesting with that 100 grand. So that's cool. That's a good idea. How do you think of that idea? Oh, yeah, Mom, there's this dude, Captain Rational, and that was a pretty good idea. Oh, shit, he must be really rational. I know it seems simple, but that's my reductionist mentality to be able to verbalize these things that are relatively simple that are so incredibly ignored in society at large. It's hard decisions. And sometimes, and I like to think, and why I'm telling you the story right now, folks, is because sometimes when I was younger, I wish people told me certain things. And I try and tell my younger cousins, like I have an 18-year-old cousin that kind of listens to me. Like I wish someone told me these things. I wish someone told me when I was in school for electrical engineering that you're fucked when you graduate from college, that you're going to be making 40, 50 grand a year with a bachelor's degree in engineering and you're going to be getting some executive's coffee. I wish someone told me the reality of what a workforce was. I wish someone told me these things. And that's kind of why I go off on tangents and digress a bit because in my life, no one told me the obvious things. Like someone needs to do it, and that's what where I'm coming from when I talk like this. Also glad you started keto. Yeah, I feel like $1 million, man. It's all water retention for me. I've historically had hypertension, but you drop the carbs, bam, glycogen goes out of your body. For glycogen to be stored, it's 2 to 1 with water. So you're flooding your body with water. So excess carbs is just perfect storm for, bloating and water retention and bam, hypertension. So I mean, it's just cut the carbs. It's just cram down protein shakes and chickens and meats, and clearly it's not vegetarian, but you could probably pull off relatively decent keto diet vegan. If so, I mean, you could do anything if you have enough drive and passion. I think that's a reasonable statement. It may be a little bit harder being vegan, but clearly, as a carnivore, I mean, inherently in meats, um, you're eliminating the carbohydrates and clearly getting significant additional protein. And so the equation is simple. If you're cutting out carbohydrates, and you compensate with fats and proteins. So you probably want to get up to a decent male amount of protein, 160, 180, 200 grams of protein a day. And that's not easy unless you're making active choices. And fats are fine. Take your red yeast rice and natto kinase if you're worried about arterial health, so on and so forth, and it manages your cholesterol and good circulatory system. Just feel incredibly different with a significantly reduced carbohydrate intake. Um, it's hard to tell someone to do something, and that's often the case. They have to realize it for themselves to experience the systemic difference and be like, oh shit, it turns out my physiology is not meant to be a carbohydrate consumer because my body has a tendency to store and accumulate excess water. When I'm on keto, I have all the salt I want, and it just your body's designed to pee out excess sodium. But historically in my life, when I'm consuming carbohydrates, if I touch salt, well, you literally can't take the rings off my fingers. But nowadays, I'll have a steak with plenty of salt on it, and my rings just are coming off my fingers because you don't retain the water at all. Changes everything. But you also said one meal a day, carnivore, close to a year now, game changer. Yes, indeed. Intermittent fasting is another story. I am a firm believer in stuff like that also. Um, Disclosure Kids, hello. How are you? Gary Network. Let's take a look. Unlegecko. Never heard of it. Loading, loading, loading. Games. Games, games, games. Uh, all right, content creators, some sort of compensation model. There's going to be plenty of this stuff over the years. I wonder if they have their own tokenomics. Have to look through the white paper. Not too interested. Not interested from an investment standpoint. I think much bigger. My 2 cents, as we've been discussing for years, is what's the biggest business on the planet, and that's dollars. That's literally credit, foreign exchange, and derivatives. So the biggest businesses on the planet that are broadly defined as banking, infrastructure, and this is content. So this is inherently a financially limited um, industry. So interesting. Everything's going to change with the AI. You won't even know whether you're talking to a person or not. So that's just absolutely fascinating. And the content, the capacity for AI to generate content, you won't know whether it's generated from a person or not. And there's going to be endless content. I'm most fascinated for post 2030 the changes that are coming to like movies. Like, I want to watch a new Marvel movie. Name the characters, name the setting, tell it to be creative based on, Avengers 1, 2, 3. Make a new variation of Avengers. It's going to make it. That's where we're heading with AI. Unlimited, unlimited content. It's really insane, which gonna disrupt the crap out of Hollywood and filmmaking. Bye bye. When you can make your own movies with a couple of clicks, and at some point there's enough compute, either locally or remotely, to do it in a short period of time. But these are all limitations that will be surmounted in time. In my lifetime, I will see that. I will be able to converse with an AI that looks like a human. I won't be able to tell the difference. Very much like, Jarvis and Tony Stark's companion, or Star Trek and the computer and holodecks. I don't know about holodecks, where you're like literally experiencing an environment. I don't see that as on the technological horizon, but I'll be able to communicate with an avatar. It looks like you're streaming on a WhatsApp or whatever, and it looks like a person, behaves like a person, it talks like a person. It's not a person. It's just software. And hey, I want to watch a movie. Yeah, no, that sounds like a good idea. Let me crank up a new Avengers movie for you. And I'm like, all right, thank you. It's gonna be so sick. It's crazy. That shit's happening. I'm still young enough to be able to have that. I'm very excited for that. Hope that helps Disclosure Kids. Just much bigger things I'm interested in. Also curious, if you recall correctly, you're not buying more ETH's prices. Why is that? I'm 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 done investing. I've been doing this shit for a long time. So right now I'm going to allow the path to play out, and it's just going to be shitty and volatile, and everyone's going to run around like chickens without heads, questioning, "Oh, is the world ending or not?" And I'm just going to take my cash and I'm going to accumulate cash. And I'm going to do what Warren Buffett does. I'm going to be sitting on a pile of cash at the end of 1 to 2 years from now. And then when the whole system implodes in the greatest depression, not the Great Depression, the greatest depression, I'll be able to buy all this shit dirt cheap. That's basically the high level of where I'm at mentally. Because I'm tired. I'm tired of all this bullshit. Have the investments. Have plenty of investments. I'm going to let the investments do what they're going to do. I'm going to let the world adopt them. I'm going to let their lindiness do exactly what I know they're going to do. And they're going to go 10x, 100x on valuations. Portfolio goes 10x, 100x over the next 4, 8 years. And the cash flow will cash flow. And when assets are expensive, I don't buy them. And when assets are dirt cheap and the system is in shambles and there's blood in the streets, I buy them. Buy at a discount. Simple as that. Cash flow, accumulate, buy shit when it's cheap. Simplify the equation. Not only, it's not to outperform, like to really try and to take capital management to the next level, but it's for psychological benefit. That is what everyone wants. They want money to come in because typically that's done from work, but they want money to come in and they want to buy shit when it's cheap. They want to invest. And that's literally Buffett 101. This is Warren Buffett's type of perspective applied from someone relatively new to investing as compared to him, but applied to crypto markets and cash flow and look at his bank account. And that's something I want to do. Build the bank account. You buy distressed assets, bankrupt assets, foreclosures in real estate, and obviously completely crashed out Bitcoin at 15 grand when the whole system has collapsed. You buy things when they're cheap. And that's basically my strategy going forward. Hope that helps. DA advisor, I agree. We've all been here for a while now. A lot of old school folks in the chat. Cap, how about the upcoming tapioca testnet? Come on, come on. It's tapioca. It's my favorite dessert pudding, which I don't eat anymore because there's too many carbs. But that's neither here nor there. So tapioca is a hell of a protocol. I was one of the first investors. I invested in what, 2022? Literally like December of 22. Nobody knew about it. They were literally just talking about it. And this was all private internal stuff, early seed round stuff. I'm the perfect investor. I will never sell that shit. I'm just waiting for it to launch. I'll play around on testnet, great. And I'll get some extra options. If I can get 50% off on options, sure, I'll exercise the options. And I look forward to it going live and more cash flow. That'll be very nice. Very excited for it because it's additive to the cash flow. New version, that's right. F of X, big stuff. F of X, big stuff. You know, I often say position size is everything. And if you can't acquire an appropriately sized position, you can't invest. Can't own everything. It's just the way it is. High opinion of F of X, high opinion of dollar liabilities, and frankly, they have synthetic Bitcoin and everything that they're doing. Synthetic staked ETH and the whole Aladdin ecosystem. So it's big tech. How could you own everything? So my focus is base layer. I just want to own base layer FX, foreign exchange, and credit facility. So it just so happens Curve is the best expression of that because it's both an FX infrastructure as well as an incentive regime, which is something I don't really consider part of the base three business models of crypto, FX, credit, derivatives, but then you also have incentive regime, which is akin to like US tax system and like grants and tax breaks. That's a big business. Um, so they really have everything. I mean, Aave is a great business. It's money market of sorts, not really FX, not really derivatives. It's a great business. Very, very interesting what's going on with Aave versus Maker. I talked about that yesterday with you, my friend. That was very interesting. Um, Anywho, it's additive. You know, Aladdin ecosystem is additive to Curve ecosystem. So I have exposure. I have a concentrator exposure. It's one of the few exposures I have directly to Aladdin ecosystem. But obviously, because of my exposure to Curve ecosystem, I inherently have exposure to the Aladdin ecosystem. Yay! Buy one, have access to many. Win-win. Up to 10x leverage. Great product. Derivative. Um, derivative. I see balancer expanding to optimism and fractal, but I don't really understand what's bullish. And then as a protocol, given curve and velo already there, can you explain? You said it. I do not have anything to add to that. These are competing business models in relatively microscopic ecosystems. The amount of capital on optimism and fractal are basically zero, amidst the amount of capital on Ethereum mainnet, which is basically zero amidst the amount of capital that's in Bitcoin and the entire crypto ecosystem, which is still basically zero. These are microscopic markets in the grand scheme of economics. So you can practically neglect the entire current capitalization as relatively zero. Everything is just getting off the ground and everything is just starting to validate itself. It'd be weird when things start to get to real validations, 5, 10, $15 trillion on Bitcoin, 3, 4, $5 trillion on Ethereum, $1 trillion in liabilities on mainnet, $1 trillion worth of liabilities across the alt L1s and the L2s. Now you're getting somewhere. Probably getting up to close to $10 trillion crypto ecosystem, which is, less than 10% of global economics. Was that 5, 6% of global economics? Still, then it's marginal. Then it's a drop in the bucket. Then it'll be on more people's radar and it becomes a significantly increasingly interesting place to deploy capital. Then you're no longer early. Then it's starting to become early morning, like 11 o'clock. Then it's brunch. So now we're in the morning. Right now, like from an investor standpoint, it's like 5 a.m. We're the early risers. We're the people that are getting up before the sun's up, taking care of some shit before anyone's out on the streets. Yeah, you got 10 trillion in these crypto markets. That's brunch. That's 10, 10:30. You. I'm just saying. That's an interesting way to look at it. We're the before breakfast crowd. 10 trill is the brunch crowd. That's a cute one. I should create a meme around that. Reverend, I keep telling people it's going to be weird. Our crypto world hasn't ever really been this tied up, but the real one is very weird, radical, new, and exciting. So that's the thing. It's going to be weird. It already is weird. 4 years ago, there was zero volume, zero activity. There's zero L2s. Binance Smart Chain didn't exist. Solana surely didn't exist. Nothing existed. You could spend nothing in USDC. Now with FedNow, you could literally jump on Spritz Finance and take USDC and get it into a bank account instantly. FedNow is actually pretty cool. Once all these puzzle pieces come into the picture, you can literally instantly transfer capital in the US from USDC to a bank account. Instantly. There's a fee attached to Spritz Finance, but there's others. I have them on our Discord. Over the years, we've accumulated a nice list of banking and fiat on and off ramps, but that none of this existed. The amount of progress and iteration and change that has occurred over the last 4 years, I don't have words for. It's flabbergasting. I don't even know how to express it, but it's seamless. And some famous dude once said money should only come out of crypto, and I kind of agree with that. So the goal there is to accumulate enough cash flow positive investments such that you're able to accumulate an investment or a reinvestment account, capital that you're accumulating so that you could reinvest at an opportune time, and capital that you could withdraw and consume, personal consumption. And you have to bucket your account and do different things with different quantities of capital. And clearly that gets more meaningful as there's more capital to work with. If you're making $100 a week and you're accumulating $50 a week in reinvestment capital and you're taking $50 a week in salary, all right, that's a little bit less meaningful than if it was $500 in salary and $500 in reinvestment capital, and that's all equally. The list keeps going on. 5 grand a week and 5 grand for reinvestment. All right, then it starts to get interesting. So the kicker there is time. 4, 8, 12 years in these crypto markets that you can achieve these types of results that are mathematically impossible in equities land. So when I say you can achieve them in crypto markets, it's mathematically impossible to do anything like that in equities land anymore, considering market cap valuations. It's just not going to happen. At least it's possible in crypto markets, and that's just personal experience. I've seen what these markets do from a multiplier perspective. And then you can have an entire conversation about total addressable market, global scale and scope, market of markets, accessible to all markets, yet of no market. Crypto is not a U.S. market. What the fuck does it have to do with the United States? It's everywhere. Everyone around the world is talking about this. Everyone around the world could connect to Ethereum, Arbitrum, Base, Optimism, Fractal, Cosmos, the whole list, all of it. And there's no middleman. Direct connection to a market of markets that's permissionless. So Reverend Nexus, my friend, it is currently weird. Hope that helps. I can't get over the description of a developing market built in cyberspace and the market of no nation. It's an emerging market of emerging markets, a market of markets, and accessible to all markets, but of no market. Isn't that right? Isn't that crazy? I mean, I don't say that with how do I say that? I'm not. I don't say that with. I say that. Isn't that objective? Isn't that literally what it is? There's no like intent there. It's. I'm not pushing crypto. I'm just literally stating that is what it is. A market, an emerging market of emerging markets, accessible to all markets, but of no nation. That's freaking weird. Amen. Raul, hello. Asun, how are you? Well, what's going on, Noah? Good morning. D.A. Advisor. Yes, he is in the house. Asun's in the house. My man. Um, 40th minute. Yeah, I do my streams, man. It's all good. I like my streams. I get back to everyone. Someone cut that self-dialogue. It is what it is. Fortunately, it's not a stream for someone else. It's just my stream. So I set my rules and I'm able to ramble and digress and this is a journal. This is a record of the captain's thoughts. So in some year in the future when I go bye-bye, this is my history. And I like that. Thanks, Captain. Your inspiration. I hope I help. That's what I do. Shameless plug. Gemac. I've heard of it. Just not familiar with it. That is shameless, though. There'll be a big push into video and streaming content across all platforms. Be wary of new big thing. It's all redundant. Yes, exactly. Well said. New and shiny isn't necessarily the best investment. The greatest tech is not necessarily the greatest investment. What would your ideal position size be for FXN? Speaking of planning based on position size, I don't know, 20, 30 grand worth. I just don't have it. So dollar denominated. I mean, we understand what the market cap is, and you just got to make sure that its price point, its spot price point, is cheap relative to its historical inflated price point, which it is relatively currently. But I don't have an extra 2030 chip right about now. Fucking Cleopatra and Nile, you motherfuckers. Probably would have been better deployed to FXN. You know what I'm talking about, Arrow. Going to get you beta access to DATA. I got no idea what you're talking about, but sounds interesting as time permits. Irreverent, amazing, observing the market of markets. We will continue to do that. 239 people made it to the end of the stream. I appreciate each and every one of you because together we could be a little bit more rational. Friday, August 30th at 12:36 p.m. I wish you all a wonderful weekend. Stay rational, make good decisions, and I will catch you on the flip side on a Monday. Till then, peace.